Good afternoon. For those of you that weren't part of the morning session, the opening session, my name is Ross Wilson. I'm the director of the Dinu Patriciu Eurasia Center at the Atlantic Council. Welcome to this first special luncheon of this year's Atlantic Council Energy and Economic Summit. This particular luncheon today is generously supported by the Istanbul Chamber of Commerce, which for the second year is partnering with the Atlantic Council in a major way to support this regional initiative that we are carrying out here. Before I introduce the Istanbul Chamber Vice President to make a few remarks, we have a little bit of a change in our program today, and I just want briefly to describe that. First, the moderator, the individual who was to moderate this session, Eric Bergloff, got tied up in London traffic on his way here and missed his flight to Istanbul, and so will not be with us today. Leading the session instead will be the Atlantic Council's President and Chief Executive Officer, Fred Kempe. We will, after the next piece we will have in rearranging our program here a little bit, Deputy Prime Minister Babacan must be back in Ankara earlier than expected for some important parliamentary business. And so we're rearranging the program here. He will speak, Fred Kempe will introduce him to speak immediately after Istanbul Chamber Vice President Avdagic. He will make some remarks. I think he will take a question or two, and then he needs to depart. At that point, the main course will be served, and then following that, the remaining participants in this session will gather as a group for a conversation moderated by Fred Kempe. With that over, it's my pleasure to again thank the Istanbul Chamber for its generosity here and to introduce to you the Vice President of the Istanbul Chamber of Commerce, Sekib. He has been Vice President since 2009. He played a major role in the work that was done here in Istanbul to make this city a European capital of culture in 2010. A very good friend of the Council's, a good friend of mine. Please join me in welcoming Sekib.
Saygıdeğer Türk ve Kazak Başbakan Yardımcıları, çok değerli katılımcılar, çok değerli dinleyiciler. Sözlerimin başında İstanbul Ticaret Odası'nı ve İstanbul İş Dünyası'nı temsilen hepinizi saygıyla selamlıyorum. Bu zirve vesilesiyle sizleri İstanbul'da görmekten fevkalade onur duyduğumuzu ifade etmek istiyorum. İstanbul'a hoş geldiniz. Yine altını çizmek isterim ki İstanbul Ticaret Odası olarak Atlantik Konseyi zirvesine destek vermenin kıvancı içindeyiz. Çünkü hepimiz biliyoruz ki İstanbul sadece Avrupa ile Asya'nın birleştiği bir şehir değil ve dünyanın çok önemli bir merkezi. Bu şehirde sadece denizler birbirine kavuşmaz. Burası sadece farklı kültür ve medeniyetlerin buluşma noktası olmamıştır bugüne kadar. Bu zirvenin de ortaya koyduğu gibi İstanbul her zaman ticaretin de, ekonominin de, siyasetin de buluştuğu bir merkez olmuştur. Hepsinden önemlisi İstanbul'da ticaretin tarihi tam 80 asır öncesine, yani 8.000 yıl evveline dayanır. O tarihten bugüne kadar baktığımızda ticari meta taşıyan, tahıl taşıyan gemileri görüyoruz. 8.000 yıl önce ve takip eden yüzyıllarda o gemiler İstanbul'dan Ege ve Akdeniz'e açıldılar. Karadeniz'den İstanbul'a mal getirdiler. Bugün de İstanbul gerçekten önemini hiç kaybetmeden bu gücünü sürdürüyor. Saygıdeğer Başbakan Yardımcıları, çok değerli katılımcılar, elbette geçmişi unutmadan bugünün değerlerini iyi okumaya çalışıyoruz. Bugün en önemli değeri ise kuşkusuz küreselleşme. geleceğe doğru sağlam adımlar atabilmek için küreselleşen dünyanın gerçeklerini iyi kavramaya çalışıyoruz. İzninizle bu gerçeklerin ikisinin altını çizmek istiyorum. Birincisi iletişim ve ulaşım teknolojilerinde kat edilen muazzam merhale. İkincisi de sivil toplum kuruluşlarının küresel aktör olarak öne çıkması. Küreselleşme ile ekonomik coğrafya artık paranın gittiği adreslere göre şekilleniyor. Ekonomik coğrafya, sermayenin, emeğin ve beyin gücünün ayak izleriyle şekilleniyor günümüzde. Nitelikli bilginin, teknolojik ilerlemelerin suladığı topraklar, bereketin ve bolluğun merkezi oluyorlar artık. Altını çizmem gerekiyor ki, enerji kaynakları ve enerji koridorları ekonomik coğrafyanın en derin sınırlarını çiziyor. O yüzden bugün ekonomi ile enerji arasındaki sıkı bağların İstanbul'da masaya yatırılmış olması çok önemli. Aynı zamanda çok anlamlı. Çünkü İstanbul, küresel ekonomik coğrafyanın can damarlarından biri. Dün İpek yolunun bir parçasıyken, bugün küresel ticaret ağlarının kalbi durumda. Bir yanıyla Asya'daki enerji kaynaklarına, diğer yanıyla enerji taleplerinin en yoğun olduğu bölgelere komşu. Elbette Türkiye ekonomisinin sadece jeopolitik gerçekleri ya da enerji politikaları açısından dünyada öne çıkmıyor. Büyüme potansiyeli ve finansal kaynaklarının sağlamlığı noktasında da Türkiye ekonomisi çok daha net artık adından söz ettiriyor. 350 bin üyesi ve şirketi olan temsil eden İstanbul Ticaret Odası adına şunu ifade etmek istiyorum ki, Türkiye küresel krizden başarıyla çıkan ekonomik yapısı ve şirketleriyle gerçekten büyük bir ekonomik potansiyel vaat ediyor. İnanıyoruz ki bölgesel ve küresel ölçekli ekonomik koşulların masaya yatırılacağı zirve ile beraber hem İstanbul'un hem de bölgenin önemi bir kez daha kendini gösterecektir. Bu zirvenin verimli geçmesini dilerken bu başarılı organizasyonu gerçekleştiren Atlantic Council yöneticilerini huzurunuzda kutluyorum. Bu arada Atlantik Konseyi'nin 50. kuruluş yılını yürekten tebrik ediyor, ülkeleri ve ekonomileri yakınlaştırma yolundaki başarılı faaliyetlerin devamını diliyorum. Ümit ediyorum ki bu toplantıyı daha çok uzun süre İstanbul'da yapmaya devam edebiliriz. Hepinizi saygıyla selamlıyorum.
Thank you for those kind words. The Atlantic Council is deeply grateful for the support for a second consecutive year of the Istanbul Chamber of Commerce. We had a very good conversation before this lunch about working together going forward and some very innovative ideas about how to bring even more Turkish businesses, energy businesses, into cooperation with us, and we look forward to working with the Istanbul Chamber of Commerce for as you said, for many years to come. As Ross said, we're going to change what's in the printed program, and it's my great honor to introduce His Excellency Minister Babacan again after his good address this morning. So I'm just going to say a couple of extra things about him that I wasn't able to say. After that, we'll hear first from Deputy Prime Minister Kelimbetov and have a conversation among our other participants here on the stage. The former Prime Minister of Hungary, Mr. Bajnai, Tzvetan Vassilev, a real business leader in Bulgaria and a great partner of the Atlantic Council, as well as the Deputy Prime Minister of Kazakhstan. His Excellency Deputy Prime Minister Ali Babacan, it may be correct to say that no member of the Turkish government, except perhaps Prime Minister Erdogan himself, has successfully worked across such a vast range of issues. Economics minister charting the way out of the economic mess in which Turkey found itself after the 2001 economic or financial crisis. He helped craft and implement economic and financial stabilization and reform policies that would have astonished Turkish leaders a few years ago. So successful was his internal and external diplomacy on economic matters that when Abdullah Gül became president in 2007, the Prime Minister tapped Ali Babacan to be foreign minister. 2 years later, he moved back into one of just a couple of deputy prime minister positions where he now oversees all things economic. It's not an easy time to have that job. I just got a flash on my BlackBerry from the Wall Street Journal reporting that the Eurozone contracted in the third quarter, the second quarter in a row of contraction, which by our measurement is a recession, 4 quarters in a row without expansion. That's a difficult context in which Turkey has to operate. Surely the fact that Turkey has remained relatively healthy despite that, and despite the security issues around it, is in significant measure to Deputy Prime Minister Babacan's skill as a manager, as leader. Your Excellency, we're grateful for your leadership today. Please join me in welcoming Deputy Prime Minister Ali Babacan, and if we have a little time, we'll take a couple of questions afterwards.
Mr. Deputy Prime Minister, Ministers, President Kempe, ladies and gentlemen, distinguished guests, it's a great pleasure and honor for me to be here with you and to address such a distinguished audience. And as I have already told in the morning, I would like to express my appreciation for the Atlantic Council and also specifically Ambassador Wilson for making this event a successful one, and its success has been proven by the fact that it is now the fourth organization, fourth summit in a row, 4 years in a row, which is getting more and more attention in our region. And today's discussions, tomorrow's discussions, I think will be quite enlightening because we have so many prominent speakers from very different countries with very different backgrounds, and I hope that this series of discussions here in Istanbul will be useful for coming up with some fresh ideas and some new strategies. Ladies and gentlemen, distinguished guests, when we talk about the European economy and how to navigate through this storm, it is quite peculiar times that we are going through. Because this economic crisis has been a very costly one. And many people compare the costs of this crisis to the costs of the Second World War. Actually, when we look at the public debt stock of the advanced countries, of the developed countries, debt to GDP ratio is going to go up back to the levels of the post-Second World War era. So in a way, that cost is now reflected in the public debt stock of the advanced countries, developed countries. And European Union, especially the Eurozone, being at the epicenter of this crisis, I think it's important to first follow what is going on very carefully, especially for countries like Turkey, which has deep integration and strong flows, trade flows, investment flows between the European countries and us. The European Union, especially Eurozone, has a common currency. And this monetary union, in a way, was designed in such a way that countries were let almost free to have their own fiscal policies. Okay, there were the Maastricht criteria, Maastricht rules. But the penalty, the enforcement for those countries who break those rules were not really that effective. It was actually first Germany and France breaking the 3% budget deficit rule, and then announcing that, okay, the rules are broken, but we are going to go back and compensate for this. And then many countries then followed. And it became such a situation that there has been now a free riders problem. Countries in the Eurozone with high deficits, living in a way an artificial level of welfare, bringing costs to those countries which have low deficits or small surpluses. So the monetary union is going to be more and more of a fiscal union and more of a banking union. Either there will be a stronger cohesion or it might be a terrible breakup. So we believe that more cohesion, more solidarity is the right way for the European Union and Eurozone to go, especially if there is one European Central Bank and only one central bank for the 17 countries. And if the central bank is the lender of last resort, there has to be a strong common fiscal framework, and there has to be strong regulation and supervision of the financial sector. If this bank, if ECB, is going to be financing countries, sovereign financing needs, and financing the needs of the banks, the financial sector, then there has to be a stronger central mechanism, which we believe is happening more and more. For Turkey, what we have been doing first was following different policies and different paths. Because we found out that government debt or public finances is going to be at the core of the discussions. And when many countries in the Eurozone or member of European Union were implementing fiscal expansion programs, fiscal stimulus programs, especially in 2009, we implemented a fiscal consolidation program. And this program worked excellent for us. We made sure that public finances are strong, we made sure that our banking sector is strong, and we enabled our private sector to do the job for growth. And our growth is coming only from private sector activity. And now when you look at the risk indicators of Turkey, like the risk premium on top of German bonds or US bonds or CDS spreads, we are safer, we are perceived to be less risky than more than half of the European Union countries. We also deliberately worked to diversify our trade relations. European Union exports were more than 50% of our total export composition. Then we were very active to open new embassies in many countries, to have new flight routes with Turkish Airlines. For example, in Africa, in 2008, we used to have only 12 embassies. Right now, we have 32 embassies. Turkish Airlines now fly to more than 25 destinations non-stop in Africa. We opened embassies in Colombia, in Peru, now in Panama, or countries like Myanmar. And Turkish Airlines now fly to 92 countries. And this ranks Turkish Airlines #1 in the world. So there is no other airline in the world which flies to more countries than Turkish Airlines. New non-stop flights like to Los Angeles, to Sao Paulo, these have been generating a lot of new business. And right now, our exports to the European Union, as of 2012, is going to be probably 36 to 37% of our total export composition this year. So we have already reduced our trade dependency on the European Union from more than half to about 1/3 of the overall composition. And we think that, especially given the domestic market conditions of the developed countries, especially European countries, it is very important to diversify as fast as possible. But then we also put a lot of emphasis on our banking sector. Because no matter what we do in the other parts of the macroeconomic management, if we are not careful about the banks, about the financial sector, it prepares a very important risk area. And we did this in a counter-cyclical way. So in good times, we have tightened the regulation on the banks. And in slower times, we have lightened the regulation on the banks. Actually, politics, and especially domestic politics, tells us the other way around. Especially in good times, when banks are lending a lot, when the growth rates are high, when companies and consumers are borrowing and spending or investing, it is very rare that authorities, governments can step in and say that, hey, we are accumulating risks, so we have to slow down. And we were able to do it. And we were able to do it twice during our government of last 10 years. The first one was in 2004-05 period, when we introduced a brand new banking law, a brand new credit card law, brand new mortgage law, saving deposits insurance fund law, and these were all done to tighten things during high growth years. Those were our high growth years. For example, with our mortgage law, we introduced 25% down payment requirement. And it was a tough job because we did that in 2006. This was before the mortgage crisis. This was before the financial crisis. And when we tried to introduce new law in the parliament, there was a big reaction. And they were telling us, our parliamentarian colleagues were telling us that, look at the US, they have the best mortgage market. They are doing this for 100 years and they don't have such rules. And why are we putting such rules in our banking system and brand new mortgage law? It took us some time to convince our colleagues, but finally we were able to do it. Because that rule is very important, to make sure that people who borrow is actually have a certain strength of paying back, and 25% cash down payment is a measure of their payment strength. And also for the banks it's important because it protects their balance sheets. Because in the long term, real estate prices fluctuate. And when the real estate price is high and banks lend, the collateral is the real estate itself. And when the prices fall and the amount of the debt is higher than the value of the property, then there is always an incentive not to pay back for the house owners. So that 25% rule has been protecting our banking system in all the ups and downs. Because the collateral, which is worth 100, is used for a loan of only 75. So it absorbs all the real estate price fluctuations and ups and downs in the economy. Another measure, we have banned consumer lending in foreign currencies. I know that now many Eastern European countries are suffering from this. They have been issuing consumer loans in foreign currencies, and when the exchange rates change, consumers find themselves all of a sudden unable to pay because of the new exchange rates and so forth. So these are, of course, not popular steps or measures when they are introduced, but it pays off during difficult times. Again, in 2010, when we were growing at 9.2%, we decided to contain the growth of the lending volume in Turkey. We announced that we are putting a cap of 15% maximum growth for the loans for consumers and for companies and so forth. It was not popular, of course, because banks were lending, our consumers were spending, our corporations were investing, we had very high growth rates, but then we were accumulating risks for inflation and for external balances. So we took steps, first with the central bank and then with our banking authority, and we introduced new measures as the government. And now the growth volume for the loan of our banks is at about 14 to 15%. So we were able to contain this. Maybe we have now a lower growth rate this year, next year, but we have more of a sustainable growth rate. It's good for stability purposes. And this approach, this measured approach, and a balancing, active balancing of our economy helped us to have lower and lower interest rates. Turkish Treasury nowadays has the historical low borrowing rates, not because of the central bank money printing operation, but because of the confidence in our system. Because our central bank, all through this crisis, did not have any extraordinary liquidity operations or extraordinary monetary operations. And the monetary policy mix of Turkish central bank is a very unique one. It's the first of its kind. It's very innovative. First, the markets approached it with a certain degree of suspicion, but now credibility is already there, a very strong credibility for our central bank to implement very innovative policy mix of monetary policy tools together with macroprudential tools to protect our economy during turbulent times. It's very effective for the bad adverse effects of short-term flow, but also it is very effective to build confidence and lower risks for our economy. Dealing with inflation on one side, dealing with external balance on the other side, for financial stability, for price stability, and the mix has been working quite well. So we are going through unprecedented times, and we have to implement unprecedented policies. These are not normal times for the global economy, for the European economy. And new policy approaches is a must. Classical approaches have been proving not to work in many cases. Like 2009, many European countries implementing fiscal stimulus programs, it's not working. It's backfiring. Or central banks printing incredible amounts of money, trillions of dollars, trillions of euros, and it is not sufficient to ignite growth. So at the end of the day, what is important is confidence. Confidence of the consumers for future. Confidence of the producers, corporate world for future. Confidence of the financial sector for future. And a policy mix which will help that confidence to get stronger and stronger. That's what we have found through our own experiences. So ladies and gentlemen, distinguished guests, maybe this was a little bit too much of a Turkey-oriented presentation, but that is the economy which I happen to know the best. So, and the results that we have got is not so bad. So, and I know that now the main course is waiting, so I don't want to make this a long speech, which is already longer than which I have originally planned. So I understand that there will be a few questions if you would like. But anyway, thank you for your interest.
I think you can stay at the podium. We'll just take two quick questions because I know you have to go. And if folks would like to start serving the main course, they can. Do I see questions? I'll turn right out to the audience. If not, I certainly have one that I would like to ask. Then I'm going to ask one and still keep an eye for a second one, but I think this one may take up enough time. Actually, let me pose the two questions because I think they're related. You said with the Eurozone, you're either going to have stronger cohesion or a terrible breakup. So that suggests to me you don't think that the option is muddling through any longer. So the question growing out of that for me is on the current trajectory of where Europe is going, is it heading toward more cohesion or terrible breakup? In other words, are you confident of the direction? And then my favorite question for people in your situation is what keeps you awake at night? What is the biggest risk you're looking at? You've got a situation with, you just mentioned Gaza and Israel this morning, you see Iran, you see Syria, you see the Eurozone crisis. This morning you mentioned your worries about the US economy. If you could pick out one of those that concerns you most, what would it be?
Okay. Well, about the first question, I think what has been done in the Eurozone and in the overall European Union over the last 1 year or so has been very positive steps forward, like the six-pack of the Commission, like the fiscal compact, like the European firewall, which is now much larger, or the programs for Ireland, Portugal, Greece, the new Italian government, new Spanish government trying to do many good things, and ECB being very, very active and doing what is needed when there's a big fire, like a fire extinguishing mechanism that the ECB has been implementing. But then we cannot rely on the central banks forever. What central banks do is just to give an opportunity window for the governments and authorities to take the right measures. It just, in a way, postpones a possible failure of a bank or a possible failure of a state. So just relying on the operations of the central bank is probably not going to work in medium to long term. But then what will happen is many, as I said, good steps, good decisions, but are they going to be implemented? Like the fiscal compact, which has to be approved by 25 parliaments, and this will be a constitution power legislation. So if there is a failure in this process, especially in some major countries, it will be a big, big setback. So we have to see if this is going to be implemented. We have to see if the rules will be followed. We have to see if the commitments will be fulfilled. So I think implementation is going to be the key word for Eurozone and for many European countries for the next months and years. But no matter what, the public debt is now so high and putting such a big burden on many countries' public finances that the potential growth rate of many countries, when we compare the pre-crisis and after crisis, it will be a much lower rates of potential growth for many countries. So for some countries to get rid of this debt, it's going to take years. Maybe for some of them, it will take decades. So Europe before the crisis and Europe after the crisis is going to be two different pictures in my view. And for Europe to go forward, it has to be more inclusive in terms of free trade agreements, for example, which the European Union is now signing with many countries. I think that's a very, very right step forward. So being more open, being more inclusive. In terms of accession, in terms of enlargement process of the European Union, as long as the enlargement continues, EU is going to gain more strength. Like our bad experience, for example, with the European Union, that our process, which is being blocked in many, many ways, especially political barriers put by many countries, and I don't think it is beneficial for the European Union. There are many things which a country like Turkey can contribute eventually, but which is being delayed more and more. So I think eventually Europe more cohesive in itself, but more open to outside is going to be a good outcome. That's what we hope and wish. For the second question, of course, Turkey is in such an area that just in the west of us, there is the epicenter of the global economic crisis. And in the east and south of the country, there is a historical transition process going on with many Arab countries. The Arab awakening, in a way, is putting some short-term challenges for this region. But then there will be medium to long-term opportunities and probably good results which we expect will come eventually. And of course, for Syria, very difficult situation now, a civil war going on, a regime bombing its own citizens. And with the situation of Iran, the nuclear program and so forth, tensions are there. And with the Israeli-Palestinian problems, which has been there for decades and decades. Very explosive, and it is at the heart of the Middle Eastern problems. And unless the Israeli-Palestinian issue is resolved in a peaceful way, in a sustainable way, we are not going to see a stable political outlook for this region. Because many problems, when we look at the deep of the roots, it's stemming out of that conflict. It is polarizing the region in a very strict way. So many risks around, but in terms of our foreign policy approach, in terms of our international relations, we are following a very principled route, a very open policy based on international law, based on human rights, based on values like democracy, rule of law, and this approach is, I think, contributing to the regional policies. And for the economic side, risks from Europe and elsewhere, I have already told what we are doing. So I think many risks around, but we are quite confident in our policies, which is not making us very uncomfortable, I have to say. So at night, I don't have much problems of sleeping, I have to say.
Thank you, Mr. Deputy Prime Minister. I just want to say a half day in your life is a long time. Thank you for spending it with us. And we know you have to go. Safe travels back to Ankara, and good luck to your country in the months and years to come. With that portion, we're going to take a short break for lunch, and I think very short because we want to get your main courses on your table, have a chance for you to chat, and then get our speakers up to the stage. Enjoy your meals. Enjoyed your lunches. We're going to offer you a little bit of intellectual dessert. In the interest of time, I'm not going to give long introductions, but I think what we've got here is we've got people very much involved in the public sector, but with a lot of private sector experience, and then of course one banker who's very much in the private sector. I'm going to introduce each of the three of them, then each will give a small opening comment, and then we'll get right into the Q&A. We're going to hear first from Kelimbetov, who has served as Kazakhstan's Deputy Prime Minister for the Economy, more or less the position that Ali Babacan has in Turkey, if I'm not mistaken. Has oversight for economics, finance, and trade. He studied at Georgetown University, so not so far from the Atlantic Council offices, and he greatly impresses all last year's Istanbul gathering with the insights he provided on how the world looks from Central Asia. But on top of that, he does really understand the global financial world and the context as well. He looked after the customs union, common economic space, Eurasian Economic Community, so he was looking after all those issues and was a CEO of the Sovereign Wealth Fund in Kazakhstan. Second will be Gordon Bajnai, Hungary's Prime Minister from 2009-2010, and he led the government as a nonpartisan technocrat, something that's become a little bit more popular in the European Union through a period of economic crisis, and he had internationally acclaimed results from that time in office. He's made a remarkable return to politics now, and is the leader of the opposition in Hungary. He taught at Columbia University's School of International and Public Affairs, last year Distinguished Fellow at Johns Hopkins, and Senior Advisor to CSIS. He also is a former businessman, and he ran and actually the CEO of the Wallace Group, the leading leading Hungarian diversified investment company. And then finally, someone who has been a regular of these gatherings, a great friend of the Atlantic Council, the Corporate Commercial Bank of Bulgaria is one of our most important corporate members, Tzvetan Vassilev, chairman of the Supervisory Board, and a true veteran also of the Istanbul Summit. Tzvetan has great insight not only into how the Eurozone operates in Southern Europe and its impact on the Southern tier, but very much also the Eurozone and its place in the world and whether or not, and what it's up against. So let's start with the Deputy Prime Minister. Kelimbetov, if you could get us started and give us your view.
So thank you very much. So actually, because of I'm first speaker on this session, so let me start to provocate a discussion in terms of the future of Eurozone. And so Euro crisis is already 3 years old. And as far from the beginning we see the situation, so we probably Eurozone is unlikely to survive in the current configuration. Because what we see, what happened last 3 years, is very far from the successful decision. So let's see, what happened in Europe. Mostly, to my mind, the decision makers try to treat the symptoms rather than really to solve the problem. And we see at the beginning, maybe it was a first false diagnostic to say that the problem is the only, in periphery countries, they probably not very mismanagement in the budget or something like this. And frankly say, the situation is not like this. Maybe only the Greece situation of mismanagement and budget and discipline. But before crisis in Spain, for example, it was a budget surplus. And I think only this year with Spain really overcome the public debt ratio of Germany. So it means that the problem not with only with, budget discipline, but probably the problem with balance of payment issues. And we see that it was a booming in Spain before Lehman Brothers collapse, and then we see that when it starts in stable situation with investment flows, then they face the problems. So again, at the beginning it was false diagnostic, and then it was, what was the proposal? Mostly so-called austerity measures. And the austerity measures was not really part of the program of creation of job places in the countries and of economic growth in the countries. And it's completely killed whatever economic growth programs in many countries. And this kind of policy was mostly in all European countries. What we see right now, we see the recession in Eurozone. And even the current last decision of creation of European stability mechanism is also a temporary decision. Okay, Europe create a bailout fund with a size with 500 billion euro, which probably will help to support the countries with distressed situation in economy or distressed bank. But this is, again, only temporary decision because we not fixed a problem. And the problem is huge. The problem is maybe, if come back to the previous terms, is more global competitiveness of European economies. If you take, for example, list of the companies which are part of NASDAQ, where we have a little less than 500 American companies, we have 40 companies from China, more than 20 companies from Israel, and just 15 companies from European Union. Let's see. Problem number one. Problem number two is the imbalances between North and South. If we have in current account surplus on Germany, which is 240 billion US dollars. The rest of the European countries' deficit of current account balance is 140 billion US dollars, and it's became more and more. So it means that a lot of problem, which is, if we see the next 3-5 years, we will not see the real willingness of the European authorities to make right decisions, to, let's say, to fix the mistakes. And I think in these terms, definitely, I am Euro optimist. I think it was a great idea of Euro integration, and it's a benchmark for us in the custom union, how we should integrate our economies. But right now, it's very difficult to say that we really start to fix the problem.
One quick follow-up for you, Mr. Deputy Prime Minister. Unlikely to survive in the current configuration. And you're not seeing a great deal of political will to change that configuration. I've talked to a couple of companies recently, including one of the world's largest insurance companies, and they're actually, they've done risk tests for the breakup of the euro, and they've decided they've covered themselves. Can you tell me how that would be with Kazakhstan? Have you done contingencies for breakup of the euro? What impact has this had on your country already? And what impact would it have on your country and the world economy should this get worse?
I hope the Europeans will forgive me for my brave provocation, but I think the current configuration should change. So the first scenario probably with some of the countries like Greece, for example, should leave the Eurozone. So let's create opportunities for the let's say, rebuild the Greece economy if their currency will be devaluated, if they will be outside of Eurozone. This is good news from one side for Greece, but this is bad news for Euro integration because let's create a precedent when one country, let's say, will be out of Eurozone, and then this process with other countries could be out of the manageable control. Number two opportunities, if to create two-track Eurozone with, let's say, rich and less rich countries. That's probably the best solution and the only solution, but as long as the European authorities will not make a decision, it's more difficult it will be to deliver it this scenario. There are several hypothetical scenarios, like if Germany will leave the Eurozone or the new elected government will stop the austerity measures. But I think finally we'll have to make some decision, and this decision will be should be really practical.
Thank you, sir. Prime Minister Bajnai, this is pretty interesting. I'd love to hear your response to the Kazakh Deputy Prime Minister. Listening to him, it sounds like the euro is as much a source of risk and instability as it is of financial stability and confidence. How does it look to you from Central Europe?
Well, when I try to understand what is happening and why it's happening, I often remember that in 1986, when I started to go to university in Budapest, it was the Karl Marx University of Economics. And the introductory subject was political economy. And then when I finished in 1991, it was already called the Budapest University of Economics, the same building. And we were studying economic policy. And we saw that this is going to, from now on, it will be eternally economic policy that will be ruling our world. And what I try to understand now is how political economy has returned into our life. And without understanding political economy, we cannot understand what is happening. I believe that Europe's crisis, pretty much agreeing with the Deputy Prime Minister, is by now a fully fledged political crisis. There are many potential economically wise solutions to this problem, but there are fundamental political reasons why these solutions cannot be implemented. The main reason is that Europe is now in a limbo of a half-hearted, half-finished, half-explained, and half-considered integration. This is a half-finished integration, And the designers of the European Union from stage to stage could never come to an optimal solution from the technocratic point of view. They always had to go for the politically possible suboptimal solution. And they have postponed problems later. And now we are facing these problems. Now, if you want to explain what is happening in Europe, or how the solution can be found in Europe, we have to raise 4 political economic questions first to find a solution. Number one, if there is a crisis, the first question to ask in politics is who is to blame? Who is guilty for this crisis? That's what electorate want to get an explanation for at the beginning. If you believe that everybody else is guilty and you are not guilty, then it will be very difficult to find a solution. And in the case of the Eurozone crisis, the simple answer to who is guilty is everybody is guilty. It was Germany and France who broke the rules of Maastricht first. It was the Brussels Commission who let Greece join on false numbers. It was the Greek and Portuguese government and Spanish government and others who were partly mismanaging their economy. So everybody has committed a lot of mistakes. And then the answer is, if everybody is guilty, then everybody will have to pay. Those who have access to cash will pay in cash. Those who don't are paying in austerity. But everybody is paying in one form or the other for the past mistakes. The second question to ask from the political economy point of view is, can you realistically expect the citizens of Germany or Netherlands and Finland, so the developed north, to sign another blank check without an expiry date for the troubles of the Eurozone? They have done it many times in the past, during the last 60 years, and the answer is clearly no. Politically, it's impossible to ask them to sign a blank check again. They want to get assurances that this sort of crisis cannot happen again. And they are getting those. The six-pack and two-pack and the whole new economic structure that is developing in Europe is developing quite far, and many things have happened which we previously considered unimaginable. So the northern countries are now getting assurances that such a crisis cannot happen again in the future. But nobody has explained how we can survive the present crisis so that we don't have to face the next one. So the answer is yes, Europe needs more integration in economic policy. That will raise new questions later on, I'll come to that, but many things have been done recently on that. The third political economic question is, can you realistically expect the citizens of Greece or Portugal or Spain or others to walk into a tunnel knowing there is no exit at the other end of the tunnel? Because this is what they are being asked at the moment. Greece is the pivotal country in this respect, because it is clear that Greece cannot repay 200% of debt to GDP, but they will not be able to repay 120 or 40% of debt to GDP. Simply the level of development in their economy is not such that they could manage such a high level of indebtedness. 70% of current Greek debt, government debt, is already official creditors, i.e. European countries and the ECB and the IMF. And it is clear that as long as the debt of Greece is not reduced to a sustainable level, which is probably around half of what it is today, they will not be able to manage their economy. And this, I understand the political reasons why this cannot be accepted, but as long as this is not accepted, the situation in Greece cannot be resolved. And to a lesser extent, much smaller problems, but still huge in Portugal and Spain, a solution has to be found that austerity is necessary, but there has to be a light at the end of the tunnel. Otherwise, you cannot ask the citizens to suffer endless austerity. And the fourth question to ask from the political economy point of view, is there anybody inside the Eurozone or outside Europe who would be better off if the Eurozone collapses? And the answer is pretty clear. Nobody would be better off. It would be a disaster.
Though the Deputy Prime Minister was arguing that Greece might be well better off if they could devalue and get a fresh start.
I do agree that Greece needs a fresh start, but I think it has to be some form of a credit easing, but it can be done inside the Eurozone. There was a UBS report a year ago which calculated that if Greece leaves the Eurozone, they would take a hit on their economy of roughly 40% to GDP in 1 year. That's practically civil war. But there was also a calculation by UBS which said if Germany leaves the Eurozone, they would take a hit of 15 to 20% on their GDP because of the sudden increase in the value of the new Deutschmark, which would again be a disaster. So while one can say it was not ideal to create the Eurozone 20 years ago, or decide about that 20 years ago, but now we are in a situation, and the way out of this situation is more integration. And then my last point is, in the 60 years history of the European Union, this is the first time that the two most important factors of politics, markets and voters, have realized that if they want to find a solution to their problem, they cannot go to the local capital, they have to go to Brussels, because the integration has reached this half-finished but large enough level. And therefore, Europe has started first to react to the request of markets and economists. But very quickly, we are experiencing now the second reaction, which will be to the demand of voters. You cannot make centralized fiscal policy, which is the heart of any politics. It is about how much money you take from one group of taxpayers and give that money to other groups of taxpayers. If you put this issue up to the Brussels level, you need to create the democratic mechanisms to control this process at the Brussels level. Because without proper legitimation, as you see from the example of the US, no taxation without representation, that is true for Europe, there has to be a proper political representation and legitimacy at the level of the European Federation.
One very quick question before I turn to Tzvetan. You say the voters are going to turn to Brussels more. I agree that one needs more democratic legitimacy in Brussels, but one doesn't have it yet. And so instead what you're seeing is a renationalization of politics, and you're seeing populism, your country above all. What's going to win out, technocracy or populism?
I believe that as I've said, everybody's interested to keep this together and develop it further, because the way out of it would be a disaster. The problem is, and if I would need to bet my 100 euros, I would put probably 80 euros betting on the Eurozone staying together, because every rational interest is there. But probably 20 euros I would convert into US dollars and keep in my pocket, because our history books, especially in Europe, are all about momentary lapses of reason, about situations where long-term rationale was overwritten by populism. And that's why our fundamental job, every politician's job in opposition or in government these days, is to counteract populism while focus on democratic legitimacy of the necessary changes and structural reforms.
So that's 4-to-1 odds, Tzvetan, or 1-to-4 if you're looking at it from the other standpoint. Let's make this more of a conversation too. We're going to go to the audience in a second, but as I asked Tzvetan his question, let's turn this into a conversation where if either one of you want to jump in, jump in. You actually have to do business in this setting. On the one hand, you have Greek capital flight making your business somewhat easier. Your bank seems to be doing just fine. On the other hand, how does it really look in Southeastern Europe? How is this part of the world, your country, coping with Europe's financial woes? And do you agree with the picture that's been painted here that you've heard thus far?
It's not an easy task to work in such conditions, and I can say that the worst thing is that maybe Bulgaria joined the European Union not on the right time, a little bit late. So my opinion about the problem and the crisis, a particular crisis in Europe, is that besides the reasons of global financial crisis, when we are discussing the crisis in Europe, we have to add a systemic errors, which Europe added to the deep reasons of the crisis. As systemic errors, I mean the way of the enlargement process was done, because according to the the basics of systemic approach, if we are talking about the system, we should assure the integrity of the system. Means we should assure the integrity of all the countries, which we didn't see in the case of Europe, because the process of enlargement, instead to back up the stability of the countries and to broaden the gap between the levels of development, it practically enlarged this gap. Why? The way it was done, simply, if you see most of the funds coming from EU structuring programs, they are not going to increase the competitiveness of the economies. They are going to support the infrastructure of the countries, which is, of course, not bad, but it's not sufficient. And if we are looking at the history and the development of the last 10 years, which is practically including the period of the fast enlargement of Europe, we can see that we have two groups of countries. Northern countries, especially Germany, Netherlands, which are having chronic surplus in the intra-systemic trade, and countries like Greece, Spain, I'm not talking about Bulgaria, Romania, the newcomers, which are creating a negative and chronicle deficit on current accounts. And being all these countries, being also not rich in primarily resources and oil, they became practically a chronicle debt position. In order to cover this, they needed to issue a sovereign debt. So this sovereign debt was growing during all these years, and especially when some of the countries not well prepared have been accepted in Eurozone, immediately the current account deficit and budget deficit have been combined, which increased enormously the problem. So it was inevitable to reach such a deep crisis, but still the main focus of we don't see the integrity of the European Union, because each country, if we look at the first reactions in 2008 of the European countries, it was to save themselves, to save their own industries. Let us remember the step of German government to pay 2,000 euro to every purchase of a new car. So this was to preserve themselves, not to
preserve the European Union.
Yes, to protect the European Union. So also, so the biggest problem is that we found now that all of us European countries were not keeping the rules practically, and also the biggest countries. But why so long time we follow this policy? Why? This I cannot understand. Even now, when Bulgaria is one of the, let's say, best performing countries, Bulgaria is not somehow remunerated for that. Bulgarian people is suffering, and nobody is remunerating Bulgarian people. What's the difference between Bulgarian people living with 250 euro salary per month and let's say Greek people who do not accept 500 euro per month?
So the European Union is not looking as attractive to Bulgaria as when Bulgaria first got in. But here's a question, and then we'll get to the audience. Prime Minister Bajnai gave us a useful number, 80%, 20%, 4-to-1 odds of the Eurozone staying together. You're a businessman who actually has to make that bet with much of your business. What odds would you give? And I'd ask the Deputy Prime Minister to give his odds as well.
I think that going this way, Europe has no big chances to survive. When Deputy Prime Minister Babacan was saying pre-crisis and after crisis Europe, we should think about continent Europe and European Union. If European Union want to continue being a union, they should change the rules, because we have a lack of leadership now. We created in Brussels a second center of bureaucracy and civil servants, not politicians with a vision how to overcome the negative impacts of crisis.
So you would turn the odds the other way. You would say maybe 4-to-1 against. I'm not putting words in your mouth, but you sound much more
I'm 50-50.
50-50, 50-50, okay.
So again, I think if it will be another 10 years discussion what to do,
Yeah.
it definitely will be a lost decade, like Professor Ferguson from Harvard University mentioned in his book. And definitely Europe needs a structural reform, and maybe it's 5-10 years issues. But the issues of Eurozone, the people always try to bring Eurozone issues and Euro integration. I mean, European Union. UK is out of Eurozone and is also part of European Union. Norway is also a European country, but out of Eurozone. And everything is going well in those countries. I mean, it should be made, the Eurozone authorities should make a decision. And as long as decision will not made, as more problem we will have in global economy. The EU is a trade partner #1 for Kazakhstan. The 51% of trade. We export a lot of the natural resources to Eurozone. The Chinese slowdown of Chinese economy also depends what will happen with the Euro economy. So it means a lot of the issues which we definitely, the independence from each other is increased last 50 years. So that's why I think we very much hoping that the decision will be made right way.
Questions from the audience? And with some real skepticism toward the future of the euro up here, I'm more than happy to take a comment on that from the audience as well, whether you agree with some of this skepticism or not. We can keep discussing up here, but I want to give you a chance at these individuals who are dealing with these issues. All right, now Atlantic Council staff will be required to ask a question within 30 seconds. So just a minute, please. Okay, great, thank you. And if you could identify yourself and to whom you'd like to ask the question as well.
Thank you. I am Christantopoulos, former Secretary General of BISEC. I would like to ask the following questions, basically to the former Prime Minister of Hungary. As far as Greece is concerned, the measures that have been, that are being implemented are not working. And they haven't been working for the last 3 years. So the question is, if the measures are not working, why does the European Union still insist of imposing them at the detriment of Greece and its society? Because as was said previously, the Greek people are on the verge of revolting. They do not see any light to these measures that are being taken. and they are not willing to make any further sacrifices that do not bring any results. Thank you.
For the Hungarian Prime.
Thank you very much. First of all, I think I agree with the assumption that was part of your question. I believe that the level of, and not just the level, the speed of austerity that was imposed on Greece are showing the limits of social affordability. Also, Greece's example is showing very quickly this linkage between decisions can only be made in Brussels, but democratic legitimacy still lies with the Greek government. And Greece has changed 3 prime ministers during less than 1 year, but the policies have not changed. And that is showing the democracy deficit and the interdependence of the European economy and then, as a consequence, European politics. That is why I believe that the next crisis of the European Union after solving the financial crisis would be the democratic legitimacy crisis. Now, secondly, I was arguing for facing reality. Greece's economy is not able to repay not even close to the current debt level or even the previous debt level. The debt level where it was reduced to from a previous level is still roughly double of the size that an economy of Greece's development could manage. There's a great book by Kenneth Rogoff about This Time is Different. And there's a full chapter explaining that roughly half or more than half of government defaults between 1970 and 2001 happened at a debt to GDP rate of below 80%. So the conclusion is the quality of institutions in a country are defining the amount of debt that a country can manage. And for example, the tax collection problems in Greece, which is clearly an institutional problem, or the quality of governance previously, are showing that the country cannot afford that level of debt. So I'm not a great believer of the solution letting Greece out of the Eurozone, because Greece at the moment doesn't have the industrial production base that could benefit from a reduced value currency and consequent increased exports. First, I think there is a strong development needed in Greece in terms of institutional capacity, structural reforms, and industrial capacity. And that will be a longer-term process. There would be a lot of development tools would be needed with European support. So I believe that Greece's situation could be dealt with within the Eurozone, but with special measures, including partial debt relief. But the big question, and on that also we have to be understanding towards Germany and the northern part of Europe, there is a huge moral hazard. If they just let the debt go from Greece, everybody else who is indebted will be asking for the same, from Ireland to Portugal to Spain, and that would collapse the European economy. So there has to be a proper balance, and we should be much faster in finding that balance between finding a solution to the debt problem and, on the other hand, not letting moral hazard collapse the European economy.
But I'll also go back to something you said earlier, which is one has a tendency to blame Greece, which is easy, or blame someone else. But Thomas Meyer, a Deutsche Bank economist, wrote about how Greece was the canary in the coal mine. And of course, one's blaming the canary instead of the coal mine. And the coal mine here, of course, is the way that the whole structure was set up to start with. Questions? Please. Oh, let's take one there and then one here. We'll take 2 questions.
Okay, I actually have 2, but we can just make it one. One question was, given the voting patterns within Europe on the EU Commission representatives in the Parliament, do you really think that the countries are willing to pass over fiscal authority into the EU Commission? The other part of the question is, if you go to a two-track system, how is that going to play out for those countries that are the lower end of the income scale and are trying to improve their economies vis-a-vis the Western European countries?
Yeah, I think this is really an interesting question because it is, if we think democracy is important, would democracy support fiscal union, which politicians are currently talking about? And maybe both of you could give your, I actually want to talk to you about Silk Road in the end, but why don't we take our Hungarian colleague and then Bulgarian colleague who's both a voter but not necessarily within the Eurozone. So, yeah, please.
On the two-speed or two-track Europe, this is a very tempting and politically the easiest solution to the current problem. And there is a high likelihood that this solution will be chosen. My biggest concern is what will be the second speed? Is it not going to be a reverse gear for those countries who are in the second tier of countries? But also one has to look at the type of countries that may or may not be in the second group. I think the situation of the UK is very different from the situation of Hungary, Bulgaria, or others. And I do believe that there are at least 4 groups of countries in Europe. I think there is the northern group, there is the southern group, which is currently in trouble. France at the moment is facing the choice whether they belong to the north or the south. It's going to be a choice of a lifetime. The third group is probably the UK, pretty much alone. UK is facing the decision whether it's the most Western country in the European Union or the closest Western neighbor of Europe. And that's going to be, again, another decision of a lifetime if it goes that far. And then, interestingly enough, the newly the newer members of the European Union mostly have followed a path which brings them closer to the northern side than to the southern side, because all of these countries has a very strong and developing industrial base. They have become a new manufacturing belt of the Eurozone. And despite all the popular discontent, these countries are benefiting still greatly from the European Union. If there is one argument that should be more widely understood, is that in this globalizing world, in this post-hegemonic world, as Professor Brzezinski said in the morning, the only chance for all of the countries and each of the countries of the European Union to not only survive but to learn to live in this new world is to keep this integration together, because divided we fall, but united we could stand if we get through these troubles.
So I'm going to close with one last question to Tzvetan, one last question, Deputy Prime Minister. Tzvetan, let me ask you a question that you're sort of the most uniquely qualified person on this panel to answer, which is, how do you play this as a business person? What is the opportunity in this Euro crisis for you? What is the danger in the Euro crisis for you? How are you playing it?
For sure, it's a challenging time. And I'm usually saying that my business life passed through a crisis, in the crisis conditions, because I started with the transition in Bulgaria, which started in 1991. So I'm following all this transition period with my business life. So conditions now in my country are not too very different than before the crisis, with only one exception. This is the so-called growth, which I'm calling artificial growth during 2005-2008, which is with very doubtful effects in Bulgaria. Because as you might know, Bulgaria has a currency board, so our local currency, national currency, is pegged to European currency. So there is no fluctuation. That's why we are quite very close to Eurozone, which is helping from one side us, but on the other side is preventing us from bigger troubles. So what I can say is that with the crisis, the conditions for the bigger players in the market, Bulgarian market, especially banks, changed and came closer to the conditions my bank was working all this time. So now it appeared that we are more prepared. There are big banks working on a different conditions and following a different strategy, which was a result of the conditions which they had before. So generally, the crisis is helping me a lot because my bank had 50% growth for the last 2 years. But on the other side, of course, a crisis having negative impact on Bulgaria, mainly because of the very low demand on local markets. So that to work with focusing only on local market is very difficult. That's why we are following now the strategy, mainly to focus the activities of the bank in sustainable sectors like infrastructure, energy, and also to support export activities of the companies based in Bulgaria, because it's the only way to somehow to amortize the negative impacts of crisis.
Thank you. Very interesting question, since one's dealt with crisis since the transition from the Soviet bloc. You're ready for this. Mr. Deputy Prime Minister, last question to you, and this is off the Eurozone crisis. We're down to the last couple of minutes, so I ask you to keep it short, but it's a big question. And that's, we've heard a lot about the Silk Road. There's a lot of buzz about this new potential economic area that could be tremendously exciting. How much of this is just hype, and how much is real opportunity?
So if we analyze until the EU economy will be in trouble, so someone in global economies should drive the growth, and probably it will be US and Chinese economy who will drive the growth. And then not only the Chinese in Asia, but also new emerging markets. And I like the conception of the growing role of BRICS countries and MIS countries, which was done by O'Neill from recently. And it's not only the China, India, and Russia, but it's also new countries like Indonesia, South Korea, and Turkey. So in these terms, we understand that the role of Kazakhstan be in a crossroads between the global economies. We would like to be closer to Europe, to Turkey, to the Middle East, and in order to be closer, we have to create really world-class infrastructure. In these terms, the idea of recovering the ancient Silk Road way, which was linked between China and Europe in past, is also part of the economic growth program in Kazakhstan. We now became part of the customs union, and we see the good opportunities for in the future development of the world economy. One issue which I would like to ask just 1 minute is, we talk about with pessimistic terms in terms of the European issues in previous minutes, but I think this is not just European business, this is global responsibility, and especially for the biggest economy in the world. And after the presidential victory of President Obama, we have a unique political situation in the United States where both parties, Democrats and Republicans, have to think about bipartisan economic program where really will face all of the economic challenges of not only US but also global economy. So this is issues which all the global players should think about. And I think as fast we solve, as fast we figure out the response, it's better will be for us to continue the building economic prosperity in the world.
Thank you very much. I want to thank these gentlemen. I think this was an incredibly rich conversation, in many ways a richer conversation on this issue than one might have had in Brussels right now. But there's so much at stake. I just returned from a meeting in the UAE with the World Economic Forum where great thinkers from all over the world were asked what they thought the biggest risk factor for 2013 would be. And the interesting thing is it wasn't the US economy, it wasn't Iran, it wasn't the Middle East, it was the Eurozone. They're business people, they're operating globally, and they see this as the biggest risk factor. So this was a very important conversation. Thank you so much.